So I'm here to talk about how we are using AI for lending, especially in the Indian context. So, does the slide work here or not? No? Okay. Can you try to get the slide on? Okay, great. So, I head AI and data at L&T Finance. We are a B2C lender with more than $11 billion in asset under management. Before we talk about AI for lending, let's talk about what is AI. So AI did not start from ChatGPT. It encompasses everything from rule-based products to optimizations to, of course, the beginning, which is machine learned structured data-based models, which with the help of neural networks can incorporate unstructured data, things like speech, video, and all of that. And then finally, there is GenAI, which is turning a models the other way and generating based on whatever you send as inputs, which allows us to take the next step into agentic AI. Now, so of course, another offshoot still in the works, which is how we can utilize quantum computing as a very different way to get at optimization and other hard problems. So with that in context, how does AI help in lending? At a very simple level, lending, you lend money at a particular yield, right? And then, of course, you borrow the money at a particular cost of funds. But that's not all. You have your operating cost, of course, and then you have your credit cost, which is basically all the money that you lose to the defaulting customers. And then finally, there is the collection cost, which you incur for collecting as customers go into deeper and deeper buckets of default. Now, what we did is we first attacked credit cost with a combination of Cyclops and Helios, which are our automatic underwriting engine Cyclops, as well as underwriting assisted Helios. We brought down collection cost using Nostradamus, which gives us a much fuller picture of our portfolio down to the level of every single customer and every single loan, and how we make specific decisions on them. And then finally, we are bringing in agentic AI in many various forms to bring down our operating cost. Result, what is left, which is our return on assets, go up. Now, the other aspect of this is growth, right? So those same models, which increase profitability, also help us optimize the loan to value higher for low risk and lower for high risk, which allows us better entry into prime segments, which drives our growth. So that, in a nutshell, is how we are using AI for profitable growth. Now, how does this relate to everyday world? This is probably a pretty familiar scene to all of you here in Bangalore. All the fantastic instant delivery algorithms some of you write. At the end of the day, they ride on these bikes that cost about $1 lakh or more. And the people who are driving these bikes are only making about 15,000 rupees a month and does not have enough balance in their bank account to buy them, right? What do they do? They go and ask for a loan, which would probably cost the EMI for that would probably cost a significant chunk out of their income. And the down payment is also probably going to be pretty significant if they follow the traditional borrowing path, because The traditional borrowing path first looks for credit history, and for a lot of young India, almost half of India is under 27. A lot of them are just in the early stages of starting their financial journey. They don't have a long employment history. They don't have a long and thick credit history. They don't. They have a income stream that is yet to reach maturity. So it looks a little irregular on the books. And yes, e-governance has gotten us to a point where we can get a lot of information about our potential borrowers, but it is still a little patchy, especially the farther down the pyramid you go. So what do? We came up with a next generation multidimensional underwriting system called Cyclops. The way it works on our two-wheeler portfolio is as follows. Apart from the traditional credit history models, we also have asked the customer whether they would want to share their bank statements with us electronically with consent, explicit consent, and also whether we can understand their expense patterns using data footprint on payment aggregators and other digital means. We understand how their digital footprints are on their phones and so on and so forth, on their phone usages and so on and so forth. And of course, location. Are there any affluence parameters or other parameters that lead us to making a better decision about them? Now, each of these, we have built models of predicting their risk of default individually. But it becomes a different level of sharpness in the razor when we ensemble this model. And that's how we come up with these segments of risk, segment 1 being the least risky and segment 5 being the most risky. Risky as in the probability of default. Now, what do we do with that? So this is where we optimize the LTV that we give, in other words, the down payment that the customer has to give, and the rate of interest that is charged on their EMI. The sweetest deal for the least risky segment and the risk-adjusted offers for the riskier segments. Now, what happens as a result is that while our distribution of across these segments was how the blue bars are, the moment we shifted the level of attractiveness of the offers, demand and supply played its role, and we saw a lot of the customers move, lot of the distribution of our loans move towards the primer segments. So the first yellow bar goes up and the last yellow bar goes down. The result of that is, remember that the first bars where they are, segment 1, is where the probability of default is least, and the second bar and the last bar is where it is most, right? The green line. So when you shift this, what it means is, on an average, your risk of default goes down. Now, yeah. So, hello? Yeah. So, what we are seeing is that making this change has brought our credit loss to a significant level. So, according to the green line, which is which is the current generation of Cyclops, we are on the path to having our credit losses down to 1/3 of what it used to be. Now, if it only worked for our two-wheeler portfolio, that would have been one thing. But we have 6 other lines of business. What about them? So we took Cyclops after this to a very different part of the country, to rural India, Bharat. So that's where So we are one of the main tractor lenders in India. And by the way, legal factoid, going by units, India actually is the biggest tractor market in the world. Now, whether farmer who took your tractor on loan would be able to give it back or not depends on very different factors. Things like how is the soil, how is the rainfall in that region, how is that village's prosperity in terms of connection to roads and mandi prices and mandi accesses. And oh, by the way, unlike two-wheeler loans where decisions are made within minutes, in this case, we always send a field investigator to the village to understand the actual parameters of the borrower. So how do you bring all of this together? And we have, using more or less a similar method that I described earlier, and created Farm Cyclops. Now, this also, with similar A/B tests, we are seeing are bringing down our credit losses by a very significant amount. Now, Cyclops is an automated decision-making engine, but we have other parts of our portfolio, like our SME loans, small enterprise loans, as well as home loans and stuff like that, where you would want to have the final decision being taken by a human, partly because they're more complicated cases and partly because they are higher ticket sizes. Now, earlier, it used to take days and days and days for the human to take these tons and tons of papers that come with the application to wade through that, whether they're bank account statements, whether they're bureau statements from commercial bureau, personal bureau, tax statements, and so on, so forth, just to figure out a few key metrics that actually matter. That, okay, these are the aggregated metrics based on which I will make a decision. And oh, by the way, a lot of times there are questions that arise. Oh, that loan, why did this guy not pay it, even though it does not sound like he did not have ability to, etc., which leads to what are called personal discussion question, and we do that. So that is what is Project Helios. Now, the Cyclops and Helios helps us in the stage up to the onboarding of the customer, where we actually disburse the loan. But then after that, whether the customer is going to keep being a good customer or whether they will slip down to default is something that we came up with a different system called Nostradamus, where we take the portfolio and we scrape all the relevant data from financial data to their digital behavioral data, as well as merging them with the macroeconomic data to understand how can we model the early warning risks, the early warning signals for each of these customers at a customer level. So that we have built with a system called Nostradamus, where any credit manager or business manager or anybody else interested in the portfolio can do a deep dive and understand how not only is their overall portfolio doing, but what action do they need to take at the ground in order to take yellow or red areas and make them better. Now, not only did we do this with visual indicators, but we basically put something that is almost like a ChatGPT on top of it. We call it Orion, where somebody can simply chat with that data and get the right guidances in order to then go and tweak Cyclops for very specific cases, or to take the right decisions on the collection side so that the collection cost can come down. Early days, and another experiment that we are running on the same data is whether quantum algorithms can help us take this very NP complex problem of optimizing such diverse portfolios into something that can be more tractable. Experimental days, don't want to show any results beyond that. these are some of the views that the customers, that the users would have on it. Now, before I end, just one last thing I want to talk about. We talked about agentic AI. We are using it not just internally, like I described with Helios, but we are also using it for better customer communication. So Customer AI, Kai, is our multilingual AI assistant. It works over 11 Indian languages, and it's available both as a chatbot, next generation chatbot on our website with agentic actions like like verifying the customer with an OTP, coming up with an exact calculation of the EMI, and so on and so forth, and also have that whole human touch of understanding exactly what the customer is saying in whichever language, and being able to give a knowledgeable answer. That is incoming, but outgoing, we have implemented Kai as a voice calling engine, where if somebody is falling behind on their payment and those kind of things, it can make a call like that. That is a call made by Kai Voice, to one of our customers who has probably been led by a couple of days or something like that.
बहुत अच्छा. Confirm करने के लिए धन्यवाद.
I don't think I have time to say the whole thing, but you get the idea. These are almost as good today as human calls. About 50% of the calls that we make this way, we do get a resolution. Early days, we are hoping that we can get it, far better trend over the next few months.
Hello, Abba Tujin.
Thank you.